More and more traders are leaving traditional broker accounts than ever before. And it's not only because prop firms are better, it's because the model is structurally better for each type of trader. In this video, we're gonna break down what's the difference between prop trading and brokerage trading, the risk, the rules, the capital, and growth plan. So you as a trader can actually decide what fits you better. We're gonna compare the systems in 5 main categories, which are the risk, how it helps your discipline, capital and scaling, rewards, and the difference for different types of traders. Now let's get into it. The first and most obvious difference is risk. With broker, you deposit your own capital, sometimes 5,000, 10,000, or even 25,000. And every dollar you lose on a trade comes directly out of your pocket. Also, there is no safety net there. No max drawdown, no daily drawdown. So theoretically, you can lose everything in just a couple of minutes. It's pretty painful, right? With the prop firm like the trading pit, the model works differently. You just pay a challenge fee. If you pass, you trade the firm's capital. And you're not losing your whole capital. You just lose an initial challenge fee in case you cannot pass an account and breach one of the rules. So for your trading journey, it basically means that your downside is capped and you know what's the maximum loss you can have after getting into a challenge. The initial challenge fee, and that's it. Now we go to the second section, which is the framework that allows you to build discipline. Here is where prop firms help you a lot. With the brokerage, you have no rules. No daily loss limit, no maximum drawdown limits. Trade whatever you want, when you want, and how you want. A lot of traders think that it's freedom and it will help you. But in reality, it works in a different way. Lack of structure for a lot of traders means that you will not be disciplined as there is no rules to follow. In prop firm challenges, you have built-in rules. Daily loss limits, max drawdowns, minimum trading days. These rules aren't obstacles. They are designed to help you stay on long-term sustainable trading journey. For example, when you have a daily loss limit, you will avoid revenge trading during the day. You can't let a bad week turn into a blown account. When you need minimum trading days, you cannot just gamble on one big position and that's it. Every rule is designed to help you develop yourself as a trader and build healthy habits inside of your trading routine. Think of it like going to the gym. Imagine there are 2 gyms which have the same equipment, but in one gym you have stuff and in other you don't. In the first gym you can ask people for advice and they can help you stand on this journey, where in the other you need to figure out everything yourself and there is a high chance that you can injure yourself. Same here. The same equipment, but very different results. The third section is scaling and capital. With the broker, your account size equals your savings. If you've got 5,000 saved up, your initial deposit is going to be 5,000. And that's it. You cannot grow from there immediately. Want a bigger account? Deposit more money. With the prop firms, it works completely different. Just one account can give you an access to up to $200,000. And you don't need to save up the whole life for that. And of course, if you're consistent with your results, you can even scale from there. You see, in prop trading, your growth isn't limited by the amount of money you have. It's all about your skills and how you actually trade. Here is the fundamental difference, and this is why prop trading opened the door for a lot of traders worldwide who had the skill but didn't have access to capital. Now let's talk about rewards. With a broker, you keep 100% of your profits. Of course, you need to spend a bit for spreads, commissions, etc. But the broker gives you access to 100% of all of your gains. In prop trading, at the trading pit, for example, you get up to 80% profit share. However, the important difference is that in prop trading, you didn't risk all your capital. But when you trade personal capital, you can get 100% of your profits, and in the same way, you can lose 100% of your capital. At the trading pit, we have already given out more than $15 million in rewards across 180 countries, giving this opportunity for different traders around the whole world. So who should use the prop trading then? If you're a beginner and not sure about your skills, you want to test yourself on the real market, if you have a limited access to capital, if you struggle with discipline and you need someone to help you build the rules, if you want to prove your skills before risking all of your savings, prop trading is built for you. Prop trading forces structure, caps risks, and rewards the traders who develop consistency. It's not a shortcut, it's just a better path. However, it's important to mention that prop trading model fits every level of trader. Even if you're an experienced trader with significant capital and years of experience managing your own risk, why wouldn't you use your skills on the prop trading while having minimal risk for your capital. The prop trading industry is shifting and evolving on a daily basis. The Trading Pit is one of the leading firms, registered in Liechtenstein, backed by brokerage arm, and has a multi-asset offering in challenges. We paid out more than $50 million already and counting. Start your challenge today and prove your trading skills. Happy trading, and we wish you good luck in every beginning you have.